overall. So here's our sale. So here's what we tried to do. This is what we decided to do. And what we wanted to do is kind of come in and have a price point where, it would be really attractive to the market, because we know that if you attractively price a home and it looks its best, you're going to be in a great position to command attention and have leverage to negotiate a better deal for yourself than you've listed. That doesn't happen in every single case, but this is really a great approach in this market. And so what you're seeing here is most of these homes, although they on average sell for 652, no one lists that high, right? And you can see here, everybody's selling over 6, basically, but they're all listing, 590, 580, 595, right? All of these are basically creating competition, and you're getting a higher result than what you've listed your property. This one went 598 to 640, 579 to 645, right? Huge increase. This is amazing. This one, 585 to 655. So we knew we had a good product. We're in this market right here. And we just figured, we're going to go here. And by the way, a year and a half ago, we wouldn't have been here, but now we're here. So we listed here, we attracted a lot of attention, and we sold this place for $669,000. And then, the only other place that sold for more than us was an end unit property that sets up a whole lot differently than ours. And so this is kind of the way that you think about these things. You're looking at days on market. You're looking at all of the data. And I'm going to come off of streaming here, Pat, of this. But you're really looking at all this stuff so that you can help your client determine the best way to market the property. And I always talk about this is in this way. There's a value for your property in terms of like the market value in what somebody will spend with money. There's also this value of marketing, right? And a lot of times those could be different, right? You might come to market at 650, but the real value might be 655 or 660. But if you price above where most homes are selling, you're not attracting the most amount of people to the property. And so we have to have this understanding of a marketing value and then a real value as well. Like, what is the monetary value? And that's how I talk about it with sellers. And again, in today's day, you're going to be able to see every nook and cranny of every property. And so this is important for us to know. So we want to be able to attract people online. And when we attract people online, that always leads to people coming through the front door. And if they're not coming in the front door, you're not going to sell your house. So, it's one thing to just have it out there, but you've got to take the people from online and be able to capture them and have them come to your front door. And when they do that, and there's a lot of them, then you get a really tremendous result, as we did in this case.
So, John, you were selling. I mean, this was in a pretty dead time of the market. We're coming out of the winter. It's not historically one of the sort of hottest times. Buyers are still a bit on the sidelines because of rate uncertainty. Well, that was starting to break up in January, late January. How many? Just let's talk results. You end up getting a great result for your client. Mm-hmm. How many people do you have come through, if you remember correctly, those types of stats? What did the pricing and the marketing yield is, I guess, what I'm trying to get to.
Yeah, good. Well, so this was like a very early spring listing basically for us. And it just closed a couple of weeks ago in like early mid-April, right? And so, yeah, this was on the market in March. Everything's sort of like thawing out, although we had a warmer winter. You're in a situation where the market was not what it is at this minute, right? And so, yeah, results were really good. I don't think we had, we didn't have 10 offers on this property. We had probably 4 or 5 offers on the property. I don't recall exactly, but we were able to take those and actually ratify a strong offer. And then we were actually able to ratify a backup offer as well. And so and we can talk about that probably on another, show, but the opportunity to lock in a second contract in this case actually worked out really well for us, because the first contract actually didn't work out. But what ended up happening was we never had to go back on the market because we were able to negotiate a great backup offer. That offer slid right in, and we never had to go back on the market. So as soon as that first contract didn't work, the second one automatically kicked in, which was a fantastic result for us. And kudos to our client for being on board with that strategy, and trying to make sure that we got a backup in there was good. Not every seller wants to do that, and in this case, that worked out really, really well for us. But the response was really good overall, and it was the desired result. We didn't feel that we would sell necessarily at 650, and that came to bear. And we were the second highest price in there. And the highest price interior unit I think ever.
Awesome. Well, John, thanks for letting us sit at the kitchen table with you. Sort of a fly on the table, if you will, and just get a good sense of what that looks like up close and personal in the data, because this is where the magic happens. Like we always say, the market tells a story. Our job is to bring the story to the client and help them understand the market, regardless of other factors, right? So a lot of people, you mentioned earlier, a lot of people say, well, I paid this and I've spent this on the house, therefore my price should be this. That actually can't come into play. If you're really intuitive to the market, you have to allow that to guide your decision making when it comes to the strategy.
Yeah.
Ignore the market to your own detriment, really.
Yeah.
So great job, man. Thanks for doing that.
You got it. I think we're losing my battery here.
All right. I'll talk to you soon.
See you, man.